Hi, everybody. Hope you're doing well. Today, we're going to cover when to buy a prep2grow recommendation or when's the best time to buy what we call movers. So, prep2grow recommendations are ones that fit our strategy. The AI and the big data has predicted that these ones are going to move within a set period of time. And for most subscribers, this is what you'll get. Movers are really made for active traders, ones that trade highly frequently, if not daily, and have their own strategy, and they're looking for us to screen out all the garbage in the market so that they can have a couple hundred that they can go through and see what fits their strategy and make investments on those strategies. This is also for our auto traders as well. So let's start with the first ones first. So let's start with prep2grow subscribers that will get our recommendations and fit our strategy. So if you get a recommendation for the day, you'll get it pre-market, either text via email. And what you'll notice is that all the ones you probably get are green. But this is green, prep2grow. So this is the one that indicates it fits our strategy. Has the right growth, has the right return within a set period of time, has the highest probability of success. So that's just us giving it to you. The second thing that we do is that we screen out any that are looking to be opening at a loss for the day. It's for options, and especially short options. If you buy into an option that's going down for the day, it's hard to recover. Right? If you got one that's a week out or a month out, you buy into it down, it's very bad. And so what we try to do is minimize that risk. And so when we give you the recommendations, pre-market at that point in time, which is about 5:30 in the morning, Pacific Standard Time, or 8:30 Eastern Standard Time, we'll only send you ones that are currently in green. So pre-market has a plus. It's looking good, look like it's gonna open at a gain. And so those are your first two checks and balances on should I buy that day. Our general rule of thumb is green is your friend, red is not your friend. So prep2grow recommendations, green here, fits our strategy, green here. You should add this to your short list to buy for the day. Now, the challenge is the market changes all the time. So if you're looking at the market today, which is June 1st, 2021, the market was expected to be up 200 points. The Dow was going to be up 200 points, and the NASDAQ, I think it was nearing 100 points pre-market. And so the expectation was Monday is going to be a great day, or Tuesday was going to be a great day accounting for the holiday. What happened is 15 minutes or so after the market opened, it started to pull back. And so the third check you have to do is wait for the market to open, see what's happening, and then if there's a change of direction, don't buy in. Or if there's a change of direction, look at one that has changed direction, in this case, Intel. And that's your third check, right? Don't buy in right when the market opens. Don't do pre-orders. Wait for the market open. Do your third check and make sure that the market is still heading in the right direction. So if we look at one that I don't think we recommend it to anybody because it was down, but let's look at Amgen. So this is a short one, July 16th. These were predicted to be down when the market opens. So this one 11%, and it's sold. And so this is a good sign that the market pulled back. If you look at it, our buy price was for $35. It sold at $5 within the same day. Our prediction was it's going to be down 11%. And it's interesting because if you look at the day's range, it was actually 242. So it was looking like it was going to be up from the previous day's close. And so this would naturally seem like a bad idea to buy into. But it pulled back when the market opened. The market changed directions, and it would have been a good buy at that point. So your third check, again, market opens, is kind of where you validate it's the time to buy because it predicted it's up or it went down. So you have to do that third check. Just don't trust that green is your friend because sometimes it's, as you know, the market is dynamic. Another good one is what we call DFS, which is for our active traders. So this was part of our movers this morning. This is a good example of one where it looked like it was just going to jump pre-market. And so if we look at DFS, while I would never buy this because the open interest rate is poor, but it has a large change in predicted price, and if the stock market is expected to pull back on this, and it's a put. So this is put recognition. So this may fit somebody's strategy. Or excuse me, this is a call. Well, let me rephrase this. So this stuff is updated all the time. This essentially means that the stock price has now exceeded it and would no longer be a good buy because it went up so much for the day. If you look at the stock price, pre-market was up 11%. 111% was our prediction for the opening. And it went up almost 3.5% when the market opened. And so based on our algorithms, it was expected to jump pretty high. It didn't jump that high for sure. We sold it off at $12.60. I don't know what the current price is, but you know, in a single day, the return on this is 20-something%. So within the first couple hours of the market. So it's right now 9:45 or 12:45 Pacific Eastern time. So this is an example of mover. So for movers, you really just want to look at this column here. You also want to, I'm sure, look at other factors like, you know, is there an unusual activity like the volume to open interest ratio? So in movers, you can sort the column and see which ones are expected to move today. So DFS is one expected to move. Has very little volume in open interest, so probably maybe not a great buy, but it's one that moved. But again, this is for our movers, and their active traders and day traders have a much different strategy than prep2grow. So again, just to summarize, for subscribers, really, if you look at our strategy, 3 checks. Green is your friend, Asana. Green here fits our strategy. Pre-market green. When the market opened, did it hold? Nope, it went pulled back with the rest of it. So when the market opens, you got to make sure it failed. The third check is it there or what was the day's range? So it failed because it's still down. So your third check would mean don't buy into it and wait. For movers, obviously, again, summary, it's your own strategy. We recommend for movers or day traders, high pre-market gain, high volume to open interest ratio, usually greater than 1 is a good sign. From a timing perspective, that's what we recommend. I hope you like this content. If you have any questions, please let us know. Reach out to us through contact@prep2grow.com. But if not, happy trading.